Welcome back to Fast Money. We are live at the NASDAQ market site in the heart of New York City. Let's get to the three headlines that could make you money tomorrow. Headline number one, how long will the gold bull last? Is the move in the commodity a short-term bounce as investors seek safety, or will the uptrend continue through year-end? Who better to ask than Peter Schiff, president of Euro Pacific Capital and author of the new book, How an Economy Grows and Why It Crashes. Peter, nice to see you again.
Nice to be back.
In terms of what has gone on in Europe, does it make you more bullish of gold or less?
Well, absolutely. And unlike Dennis Garthman, I am an unapologetic gold bull. I've been bullish on gold for 10 years. And, what's happening makes me more bullish because Europe is becoming more like the United States. What Europe is saying is that the nations that share the euro currency, they will not be allowed to default. No matter how much money they borrow, the European Bank will simply print euros to pay it off. So they are going to inflate rather than default. That's a page right out of our playbook. They are going to make the euro almost as weak as the dollar. And, now I might have to say, instead of just going to 5,000, maybe gold's going to 10,000. And I know somebody there said, why isn't it at 2,000? Don't look a gift horse in the mouth. Just buy it.
Pete, again, great call on gold. But, you can't deny that since last we were on, the U.S. dollar against the other major currency out there has rallied sharply. As a matter, since probably the beginning of the year, the U.S. dollar's done extraordinarily well. I know you're going to throw some ancillary currencies at me, but there's no denying the dollar over the last 6 months.
Gold is the best arbitrator of the dollar's value. The fact that temporarily the euro is weaker than the dollar doesn't take away from the fact that the dollar itself is weak. It is losing value. You can measure its value in gold. I was watching on CNBC. It was a different program, and it was a classic, CNBC moment where the host asked the guest if there was only any real demand for gold or if it was just going up. And the guest said that there was no real demand. People were just buying gold because it was a safe haven. That is the real demand. Gold is safety. It's money. It is a way to preserve your wealth.
Peter, not to interrupt you, but what if you get an economy that's growing a lot faster than the rest of the general consensus thinks?
Our economy? Our economy's not growing. Our economy is a disaster. We're printing money and spending it. Our debt is growing much faster than our GDP.
Okay,
all we're doing is growing the government, buying more stuff.
I'm asking you sort of a theoretical question then, because I know you're long gold and you love gold, but I just want to hear the contrary and critical thinking. What if the economy grows, and then what do you do?
Well,
what happens to gold bullion if the economy grows?
What if elephants sprout wings? Will they be able to fly? I mean, you're asking me a question. The U.S. economy can't grow.
That's a cute television answer, but the truth of the matter is there's a lot of variables in the markets, and that's what makes trading. There's a group of people that actually think the economy is going to grow faster.
Yeah,
so I'm just curious if it grows
every minute.
faster, what happens to gold?
A lot of them are on Wall Street.
Obviously, Peter doesn't believe that the economy is going to grow, but Joe, I want to get you in here.
It can't grow with all the new government spending, with all the new regulations, with all the money printing, with all the debt. It is impossible for the economy to grow. The only way the economy can grow is if we save our money and invest and produce. And we're doing none of that. We're doing everything to destroy our economy.
Hey, Peter, it's Joe. Before we let you get out of here, I got to ask you, Chinese yuan revaluation, are you concerned that it has not begun the process just yet? And what do you think the effect would be on global markets if they don't revalue?
Well, look, the Chinese are going to have to let their currency go up. What's going on in Europe should be making them cringe, because instead of having to prop up the United States economy, now they might have to prop up Europe as well. I mean, they can't be the only ones lending. They can't be the only ones saving and producing. China needs to cut the cord for its own sake before they turn their currency into confetti, too. And I think that they will. And when Chinese stop subsidizing our consumption and our debt, it is a big problem for America. It is a boom for China. But, of course, in the long run, the best thing China can do is cut us off. Because the more money they lend us, the deeper the hole we dig for ourselves.
Peter, I want to connect the dots for our viewers out there. If you believe gold is going to go to 10,000 an ounce, and I'm looking for a number or percentage from you, where will the U.S. stock market go?
Well, the stock market might still be at 10,000. What I've been predicting is that the relationship between gold and the Dow will be 1-to-1, just like it was in 1980 and just like it was in 1929. So that can be gold 5,000, Dow 5,000. It can be gold 10,000, Dow 10,000. I don't know, but I think those two numbers are going to get very close to one another.
Okay. Peter, thanks so much. Always appreciate your time.
Sure.
Peter Schiff of Euro Pacific Capital.
Gotta love Pete.
Yeah, I mean, he
passionate.
sticks to his guns.
I'm still curious about the elephant
sticks to
question.
his guns.
Penguins have wings,
I know. I was going to say it depends on what sorts of wings those elephants
And
sprout.
he has been right. You got to
He
get
has been
that.
right. All right, let's get to the Fast Money poll of the day. Tonight, we ask you, where will gold end this year, 2010? A, 1,000 global bailouts will in fact work. B, 1,200, it's fairly valued. Or C, 1,500, the only reserve currency left. 10,000 is not on there. That's Peter Schiff's prediction.
Write in.
You can write it in. Log on to fastmoney.cnbc.com right now and cast your vote. Remember the fast message we got moments ago asking when somebody should sell, Jeff, I think, should sell his wedding ring?
You shouldn't, but go ahead.
We got this fast message in as a response from Dave B. in Madison, Wisconsin. He writes, sell the ring on Friday. Very specific. Look at the RSI, Relative Strength Index. Gold is topping. It'll soon come off 10%.
That's actually Jeff's father-in-law.
Not for long.
Man.
But
All right.
Jeff's wife.
I want to bring back Dennis Gartman for the exclusive preview of the Gartman letter. Dennis, what are you cooking up?
Well, I'm going to cook up about the same thing I've been cooking up for the past several months. The euro is weak. The euro has problems. They've thrown $1 trillion at it. They haven't actually thrown it at it yet. They've told us that they shall. They've put nothing to work. And yet the euro, having gotten to 131 yesterday, is trading under 127 today. Horrible, horrible action. I'm going to explain that they're throwing good money after bad, throwing it down a rat hole, and I think they have a problem there. So the euro continues to decline, and in gold probably continues to go up, especially in euro terms.
Okay. Dennis Gartman, thanks. Always a pleasure to see you.
Thanks for having me.